So let's take a look at how most traders' emotions work. This was the decline in gold from April all the way into August. This was the point at which I was getting emails left and right telling me that gold was going down to $1,000. It was never uh, going back up. There was no scenario in which gold could ever go back up. Basically, telling me, I was wrong. And of course, this is 4 months later. Gold is forming a nice rounded base, bottoming pattern. Um, we're preparing for inflation. I've noted this before. At the recent high, the dollar was actually, I think it did make a marginally higher high. Um, and gold still is not even vaguely close to the August low. Um, the reason is because the dollar is going to top, and the CRB and the stock market are going to bottom, and we've got inflation ahead of us. That this is what happens when you get these big multi-year cycle lows. Sentiment and emotions become locked in one direction, and traders just can't envision any scenario in which the opposite could happen. So, like perfect example here in gold, this August bottom, traders could not envision any scenario, any fundamental driver, any way that gold could possibly turn and go back in the other direction. But that's what happens at these major turns. Um, the market it is setting up traders to be on the wrong side of the boat. Everyone um, get, gets locked into the wrong direction, and then eventually the last seller has sold, and the market turns and goes in the other direction, and then ultimately the other um, emotional sentiment level develops, and traders um, assume that there is no scenario in which the market can turn and go back down. So um, we're in the process of making people believe that deflation is coming, and it's not. If deflation was coming, gold would not be up here, even though the dollar has printed another slightly, marginally higher high. Gold is not back below the August low. So gold is telling you that the rally in the dollar is not sustainable, that the dollar is going to roll over and head back down. And we've got inflation coming, not deflation. All right, so I've been talking about this in the last several months. The CRB is moving down into a major 3-year cycle low, the same degree cycle low as this right here. We are not going to drop below this right here. This cycle is right translated. This has been a basing cycle for almost 3 years now. The CRB has just kind of churned in this um, lower box here below this pivot, and it's preparing for a strong move in the upwards direction. That's what's going to happen when the dollar rolls over. We're going to get inflation. Um, so over the next 3 to 6, 8 years, the CRB is going to be moving much, much higher. This is the basing phase in preparation for that. Gold has already turned. Gold turned way back here in August. The CRB is in the process of completing its 3-year cycle low currently. I don't know that I wouldn't say that we completed it yesterday, but I think we're very close. And then the same thing is happening with the stock market. So again, at this top and this top, emotions were running rampant. Everybody assumed that there was no way that price could ever go back down. And then once it does start going down in the other direction, the emotions flip 180 degrees, and they assume there's no way that price can ever go back up. And I just showed you with the chart of gold that is false. Um, we are not starting a long-term bear market. definition of a bear market, but this is not a repeat of 2008. Folks, that was a generational event, a collapse of the financial system, and it's not going to happen again in our lifetime. Um, we are getting an early 4-year cycle low in the stock market. The same thing that happened here. And was this the end of the bull market? No, of course not. Is this going to be the end of the long-term bull market? No, of course not. This is just a major um, multi-year correction being driven by the Fed probably hiked one too many times on interest rates and the trade war with China. Both of those are going to end. There's, the odds are pretty good that the rate hikes are going to end Wednesday, or maybe they already ended if Powell doesn't raise on Wednesday. The trade war is going to be settled. All trade wars are eventually settled. And so this is going to end. Price is going to turn, and we're going to go back up. The bull market is being driven by another step up in humanity. The last one was driven by the personal computer and the internet. Improved the quality of life on Earth for human beings. Same thing is happening in this bull market. We've got amazing advances in healthcare and biotech and robotics and nanotechnology and autonomous transportation, clean energy. This is all driving another leg up for humanity, and that's the reason we have this ongoing long-term bull market, and that isn't going to just stop. All right, so here's the number of stocks on the New York Stock Exchange above the 200-day moving average. This was the 4-year cycle low in 2011. This was, I believe, after QE2 was terminated. I believe we had the big sell-off, 20% or almost 20%. This was the 4-year cycle low into that bottom in 2016. Almost a 20% sell-off in stocks. And now you can see the market is oversold to a degree that is consistent with a multi-year cycle low. Again, I'm going to say this is just like that gold chart. We are not going down forever. This is not a repeat of 2008. We're already too oversold. We're already at levels consistent with multi-year cycle lows. So the odds are very high we're going to take away one of those drivers, or one of the fundamentals that drove this, and that's the interest rate hikes. We're probably done with that. And at some point here in the not too distant future, the trade war is going to end. This will all turn around. We'll print our final 4-year cycle low, and I suspect we're going to print it sometime this week. Maybe on the FOMC meeting, maybe we print it early next week, but we're going to print it. The breadth is so oversold that we're at levels consistent with a multi-year cycle low, and we're getting very deep into the daily cycle. So that bottom is coming soon, and then price is going to turn and go back up just like it did in the gold market. Even though nobody believed me back on August 16th, that's exactly what happened. Nobody believes me that the dollar is going to roll over and start moving down into a bear market, but that's exactly what happened. And of course, nobody will believe me that stocks are not going to crash like they did in 2008, but that's exactly what's going to happen. The stock market is going to find a bottom, and it's going to turn and go back up just like gold did.